Hello, and welcome to the May Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. We had a great month for markets. Despite all the worry, despite all the doom and gloom, actually, markets did nothing but go up last month. Here in the U.S., the different indices went up from about 2.6% for the Dow, and that was held back by Boeing with all of the problems it's had, to doing much better at almost 5% with the NASDAQ and the S&P not far behind. Again, a great month and one we don't see all that often. The news abroad was good too. Developed markets were up almost 3% across the board, while emerging markets were up over 2%. Even bonds made money last month despite all the good news, so for financial markets we saw pretty much nothing but green across the board. And that's a little bit unusual, so I think what we have to ask ourselves is what is going on here, especially given all of the worries, all of the concerns that we had at the end of last month. Remember, we were worried about the economy, we were worried about things slowing down. But in fact, what we saw over the past month is the data has actually gotten better. We actually saw the economic growth for the first quarter come in well above expectations. Now, some of the groundwork behind that was actually a little bit soft, but nonetheless, a win is a win, and it did very well. And even some of the weaker stuff actually started to improve significantly over the past month. We saw consumer spending pick up. We had a real rebound in consumer spending as people felt better. And in fact, we saw consumer confidence bounce back as well. We saw business investment pick up above expectations. We saw the trade deficit come in better than expected. In fact, while nothing was perfect, everything was pretty darn good, particularly in light of how depressed the expectations were. And that helped a lot. We also saw political risks recede. We saw Brexit go from tragedy to farce over the month. We saw the Mueller report create pretty much nothing against all of the worries and expectations there. And on top of all this, we actually saw companies making more money. There was an expectation that earnings were going to decline for last quarter, and they're on track to go up because they're actually beating expectations by more than anybody expected. So when you look at people feeling better, when you look at businesses feeling better, when you look at spending and investing pick back up, you can see that in fact, things are a lot better than we thought they were going to be last month. And that's not actually a surprise, because we've seen the first quarter be really, really weak over the past several years, only to rebound significantly in subsequent quarters. And it looks like that might be exactly what we're seeing, because we're going into the second quarter considerably stronger in every way you look at it than we were going into last quarter. And that's a good place to be. Are we out of the woods? Certainly not. There are risks out there, there are things to worry about, but nonetheless, when we look at the factors that took the stock market to new highs, we can say that we are in a pretty solid place, and certainly this is a good place to be looking forward to the next month. What will happen? I don't know, but we'll talk about it then. Thanks for watching.